You know, Greg, I think it is really a testament to the challenge that those wide differentials were giving to the industry. As you may know, Cenovus has the lowest operating costs and lowest sustaining capital in the industry, and the results that you saw were directly a result of these historically wide differentials. So no, the impact was very, very significant. I mean, you can just take a look at this last quarter, compare it to quarters two or three, where we had much more what I would call reasonable differentials, and the company produced around 1.2 billion of free cash flow. So no, it was very much an impact. I think the good news is with curtailment, with volumes ramping by rail, and with hopefully with Enbridge's Line 3 coming in towards the latter half of this year, I think we are through those very wide differentials. I don't expect to see those back.
Now, the curtailment's not supposed to last forever. Is it critical here that the government gets this right in terms of their exit strategy on curtailment to make sure that we don't see the differentials widen back again?
Well, I think, I as much as, I think people are enjoying these really narrow differentials, I think the government realizes, and certainly I think their strategy is to moderate curtailment to a level where we see differentials that will incent incremental oil by rail movement to come on. So, as I said, we're all enjoying these $10 differentials, but I expect that's a relatively short-term phenomenon, and I would expect the government will manage curtailment volumes to ensure that the incentive is there for companies like mine to get moving oil by rail.
Now, you have been very vocal in support of the curtailment. Other companies in the patch, the integrated producers, some of the big names haven't been, and they say that it's simply messed up the economics of their business and that crude by rail is uneconomic for them now. What do you make of that argument?
Well, I mean, I look at everybody's financial results. I look at what the analysts say. From what I've seen, pretty much every company has benefited from curtailment. Obviously, some more than others, but it doesn't seem to me that there is anybody significantly suffering as a result of that. And as for this idea that curtailment has made rail uneconomic, I would just remind everybody that despite how much we've talked about this, we are a grand total of 6 weeks into this curtailment strategy by the government, and I think there's been a lot of noise in the early weeks. But as I said, I would accept government has already acted on a couple of occasions to adjust the rules and the volumes, and I expect they will be active in order to ultimately ensure that the differential is wide enough to incent rail, because ultimately we need Line 3, but we also need oil moving by rail, and I think that's ultimately where the government goal is. And if as long as we see that, I would expect we will be largely, if not completely, out of this curtailment towards the latter half of the year, or in the latter half of the year.
In the latter half of the year, it'll be over. I'm thinking about your balance sheet as well. Obviously, we went through a tough quarter. The ConocoPhillips acquisitions of 2017. You're trying to shore up the balance sheet. Did this past quarter, did the big widening of that differential really impair those efforts?
No, and I think it's a testament to the resilience of our company, and the efforts that we've made on both improving the balance sheet and driving our costs lower. But even in probably the toughest quarter that this company has ever seen, we were able to materially pay down our debt balance in Q4. We're, give or take, probably slightly above $8 billion at the end of the year net debt. At the commodity prices we're seeing right now, we will continue to materially pay down that debt into 2019. We have a short-term target of $7 billion, and I think we're well on the way to getting there, with an ultimate goal of, we think the optimum level of debt for this company is around $5 billion. And I think one of the things that a lot of people don't appreciate is this company's ability to generate free cash flow in a reasonable commodity price environment. So I'm highly confident we're going to get quickly to our intermediate goal, and we ultimately will get to that the $5 billion lower end of that in a reasonable period of time.
Now, right now, the province's energy policy being steered by Rachel Notley and her government. Jason Kenney would sure like her job. He's talking a lot recently about taking off the gloves when it comes to fighting for the energy industry. Do you think he's taking the right approach, that you need to get tougher now at this stage of the fight?
Well, he and I are kindred spirits in that regard. I think this industry, I think for a long time we've felt that all the benefits of our industry will speak for itself. I think what we've all learned is that we have a lot of opponents out there who are not constrained by the truth. And our industry, the midstream industry, people employed by this industry, Albertans, Canadians, need to get out there and defend this industry. So anytime a politician says that they're going to get out there and fight for this industry, they certainly have my support.
Now, politics of a different sort in Ottawa. Obviously, a growing controversy over SNC Lavalin. I know that they actually have contracts in the oil sands. Is there anything that SSC Lavalin is doing for your company right now that you have concerns about?
No, I'm not aware that SNC is doing any work for us right now.
Okay, so it wouldn't impact you directly, but they do have projects in the oil sands. I'm more thinking about the fact that if the criminal prosecution goes forward, they get barred from Canadian contracts. There could be some upheaval in the patch. From your point of view, is this an important company in terms of not only having an engineering giant in Canada, but also the involvement they have in the infrastructure of the oil patch?
Well, you know, I would tell you this. I mean, any time a really large Canadian company faces this kind of difficulty, you worry about their employees, you worry about their shareholders. But I would say to you, we have a very, very broad and capable range of contractors, local contractors, and you know, from that regard, I am 100% comfortable that there are ample, very, very qualified contractors who would be able to step in if there were any sort of disruption as a result of what's happening to SNC Lavalin.